Bring in Mary Barra, Chair and CEO of General Motors. Mary, I just heard you on the conference call with analysts. Some fairly tough questions about where General Motors has been in the last year. And you said it on the call. You've had some execution issues. We'll talk about the guidance and the updated guidance in just a little bit. But how do you convince investors, yeah, we had a bad year last year or 2023, but we're going to get our act together?
Well, I think, Phil, when you look at what we've achieved in 2023, yes, we had some challenges with module production that we weren't able to deliver as many Ultium-based EVs as we would like. And we've had this recent incident with Cruise, and we're doing a review, and we will make sure that we have the right path going forward. But from an ICE perspective, really have really strong performance that we've been able to have the right products that customers want to buy. We're below what the average incentive prices are. And so when we look at other parts of the business, they've operated very well. There was a lot of challenges this year with labor negotiations, et cetera. Those are behind us now. And that's what gives us confidence in the business, confidence to do the ASR at a $10 billion level. And, we're going to move forward and execute and, again, move past these, I'll say, bumps in the road in the areas of autonomous and electrification.
Mary, let's talk about that stock repurchase program. You're immediately going to buy back enough stock to retire about 17% of your outstanding shares out there. When did the board make a decision? You know what? $10 billion is the right amount of money that we need to spend in order to bring down the number of outstanding shares and to boost the stock.
Well, I think when you look at from a capital allocation framework, we always look at that on a regular basis from a board perspective. And this was a recommendation from management because as we got through some of the elements of the year that were driving a lot of uncertainty, once we had that certainty, we were able to make this decision and get to a place from a cash balance perspective that is more what we've said we want to have going forward. So this was really a reflection of our capital allocation framework. When you look at the last few years, there's been a lot of uncertainty, whether it was the pandemic, semiconductor, labor. Those are past us. We have confidence in the business going forward, both in our internal combustion and our EV and our software, and then our path that we'll work on from an autonomous perspective. That's what gave us the confidence and the board the confidence to make this decision.
I don't mind. Thank you, Mary, for being on our show. I wanted to ask you, Mary, not that long ago, I was in a self-driving car with Kyle Voss in San Francisco. Was I in an unsafe position? Should I not have been in there? Was that a danger to me that I rode in that? And two, why did Kyle Voss leave? I understand he wanted to spend more time with his family, but I also understand that Waymo did not have to get pulled, and yours did get pulled. I want some answers on what happened here.
Well, let me take that in from a reverse order perspective. I think when we look at from a Cruise perspective, Kyle left on his own. So that was a decision that he made. And I think asking him why he did that, I think, would be a better question for him. When we look at, the difference of what happened to Cruise, I think it was a lack of transparency. And this is something that when General Motors learned what had happened in the incident that was, tragic, we have gotten more involved and leaned in. We still have a lot of faith in the technology community and the technical talent that's at Cruise as we move forward. But clearly a better job has to be done in building relationships and being transparent with the regulators at the state, the local and the federal level, as well as with first responders. So I think that was one of the issues as we move forward, and we're already building the relationship and leveraging the strength that General Motors has in this space of having a strong government relations team at all levels. And that's one of the things we'll do forward. From a General Motors perspective, safety is an overriding priority, and we always focus on transparency. So driving that into the Cruise operations is a number one objective that we are already undertaking. I've ridden in the vehicle many times as well, and I think as we go with this technology, we have to look at the fact that 40,000 people lose their lives and 90% of accidents and fatalities caused today are caused by human error. As we move this technology, we've got to get better faster. But I think when we look at where it is compared, and there's been studies done as it relates to safer than a human driver, I think what we've learned in this, it's got to be much safer than a human driver.
Fair enough. I want to switch directions to something that hasn't been talked about that much, which is China. In 2018, your market share was 13.7%. Now you're at 8.6%. In the meantime, it's fair to say that between 2018 and what at least the first 9 months of 2023 indicate, your sales may have been, in billions, may have been cut in half. Would it not be better to try to figure out what to do with China than just buy back shares? And what happens if President Biden says, you know what, cars cost too much money, let the Chinese sell cars here?
Well, I think a lot packed into that question there, but we have been working. I mean, I think there's a lot of change happening in China when you look at their rapid shift to electrification and the rise of a lot of domestic EV companies. I think there's still sorting that has to happen. There's over 100 companies, and many of them are not profitable. We are still in the high single-digit share perspective between our two joint ventures, and so having the right portfolio and participating where our brands belong in that market is something that we're very focused on. And so I think we can have a good position in China, but recognize there has been some structural changes there. And your second question, Jim, was?
Oh, just in terms of, I'm trying to figure out how much money, that money would be better spent there. I mean, because I'm trying to figure out how come your sales went down so much. And the sales are down substantially in terms of market share and in terms of amount of money.
Yeah, I think, though, if you look, there's been very much a structural shift with the domestic OEMs really gaining share and gaining consumer acceptance, which I think for several years prior, the markets were dominated by Western manufacturers. And with the shift to electrification, there's been a reset there. And again, when you have 100 new entrants coming into a market, there's going to be a shift. We think we're well positioned with our plan in China, and that was all factored into what we're doing and from the ASR. We think we have the right plans for each areas of our business that gave us confidence to do the $10 billion ASR.